the policy itself was entirely along expected lines, 25 basis point cut and a neutral stance being maintained. Important point on liquidity though, and this is actually contrary to what you're seeing on rates, the RBI Deputy Governor Viral Acharya reiterated that they will continue to manage liquidity actively. They have currently been pulling out excess liquidity through open market operations. He said that apart from that, they are still in discussions with the government to widen their toolkit on liquidity management. The message out there is that we are not going to allow huge surplus amounts of liquidity to slosh around in the market, which is where the contradiction comes in, right? You're pulling out surplus liquidity, but you're giving rate stimulus. So there is a little bit of a contradiction there. Nevertheless, that is the way it is. Beyond that, not a whole lot to report in terms of the bank asset quality problem, but two things I want to flag off. One, in the statement, they said that the Government of India and the Reserve Bank of India are in discussion to recapitalize public sector banks, quote unquote, within fiscal deficit limits. So there is some discussion going on there. That should be good news for the public sector banks. When that money comes and how much money over and above the 10,000 crore is given to these banks still needs to be penned down and fixed upon. The last point that is noteworthy, but also, to be honest, slightly laughable, the RBI is saying that they are going to set up a committee to review the MCLR system, because the MCLR system is not working as well. So, BPLR wasn't working, then you had base rate, then that wasn't working, now you have MCLR and that isn't working. So they're once again talking about linking bank rates directly to some market-driven instruments. We'll have to watch how that plays out.